Hi, and welcome back to the Food Fun, where we analyze investing in food, beverage, and restaurant stocks. Is my favorite restaurant company a good investment? In this video, we will be analyzing if Chipotle stock is a buy. Could Chipotle, stock ticker symbol CMG, be ready to rocket even higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Chipotle. Chipotle was founded in 1993 when founder Steve Ells opened the first Chipotle in Denver, Colorado. Within a month, that first Chipotle was selling over 1,000 burritos daily. Growth has continued from there, driven by a commitment to fresh, high-quality ingredients and customizable meals. They offer a variety of burritos, tacos, bowls, and salads featuring meats like chicken and steak along with fresh vegetables, guacamole, and salsa. Today, Chipotle boasts over 2,000 locations across the country with their headquarters located in Newport Beach, California. Now let's look at the price action. Starting with the one-year chart, we see that Chipotle had a CAGR of about 17%. Zooming out to the 5-year chart, we see that Chipotle had a CAGR of 27%. Chipotle has been a great, consistent grower and shows no signs of stopping. Shareholders have been very pleased with the performance. Now let's hop over to market share and take a look at Chipotle market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that Chipotle is categorized as a fast food restaurant company. Expanding the fast food tab, we can see that Chipotle has the 4th largest market share of the companies in this category and is growing market share at a healthy pace. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Chipotle, CMG, and see that the market share is 1.33% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Chipotle commands a decent portion of food spend and has been growing market share consistently. The 5-year market share CAGR for Chipotle is 9.21%. This means that Chipotle market share is outpacing growth in the wider industry. If we start in 2020, we see that the market share was 0.98%, 1.06% in 2021, 1.09% in 2022, 1.2% in 2023, and 1.33% over the trailing 12 months. If we look closely, we can see that market share growth is actually accelerating. This is a juggernaut company. Let's take a look at the fundamentals to learn more. Gross margin is 41%. This is very good for a fast food restaurant company. Revenue has compounded at around 18% over the past 5 years and has reached over $10.98 billion most recently. Chipotle revenue had been growing very quickly, indicating that customers love the product. When we look at cash flow, we see a 31% CAGR over the last 5 years for operating cash flow period. CAPEX has worsened at a 13% CAGR. As a result, free cash flow has grown at a 48% CAGR. This is a textbook example of smart expansion. Chipotle is using its growing operating cash flow to build out new locations that drive further revenue and operating cash flow growth. Meanwhile, free cash flow increases at an ever-growing pace. Weighted average shares outstanding have declined over the last 5 years, going from 1.4 to 1 billion shares in 2020 to 1.38 billion shares most recently. Chipotle has been very busy buying back shares. This is what I like to see. Chipotle is very intelligently buying back undervalued shares. Clearly, the management team is doing strong work. Now let's view return on invested capital. Return on invested capital has grown from 8.4% in 2020 to 19.7% most recently. This value continues to grow higher and higher, showing that Chipotle is only getting more efficient. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -3 days in 2020 to -7 days most recently, Chipotle has gotten more efficient over time. It just gets better and better. Now, let's look at Chipotle debt. The net debt to EBITDA has decreased substantially over time, going from 3.9 in 2020 to 1.4 most recently. While Chipotle still has debt, they carry a very manageable level. There are few restaurant companies as great as Chipotle. In any event, is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. subscribe, and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Chipotle. It is a restaurant company with a gross margin of 41%. The 5-year revenue per share CAGR is 18%, and the 5-year free cash flow per share CAGR is 49%. This is a strong gross margin with incredible revenue and free cash flow growth. A return on invested capital of 20% is outstanding and getting even better. Next, the cash conversion cycle of -7 days is ridiculously good and is among the best I have seen for a restaurant company. Concerning debt, a net debt to EBITDA of 1.4 means that Chipotle could pay off its debt with a little less than 18 months of earnings. So from a fundamental standpoint, Chipotle is super strong. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, is 2.7, indicating that Chipotle is overvalued relative to their projected earnings growth. Chipotle's brand power is undeniable. They've built a cult-like following with their focus on fresh, high-quality ingredients. This strong brand loyalty translates to consistent customer traffic, even during tough economic times. Plus, they're constantly innovating with new menu items and digital ordering options, which keeps things exciting for customers and drives sales growth. And let's not forget those rising margins. They're squeezing more profit out of every burrito they sell, which is music to investors' ears. The only concern I have is that the PEG ratio is moderately high right now. This means that investors are paying a premium for future growth, which carries some risk. Still, the company's international expansion indicates a bright horizon for investors. Overall, I give this company an 8 out of 10 using my proprietary scoring system. Clearly, I am bullish on Chipotle as the restaurant sits in my portfolio. I love being both a customer of and investor in this great restaurant company. Many thanks for watching. What do you think about Chipotle? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.